Hi everyone, my name is Simon Mishevich from Optimize Accountants, and in this video we're going to be talking about US tax structures. And in particular, if you're moving to the US or investing in the United States, then you might want to consider using a C corporation, which is a limited company, or an LLC, which is also a limited company. Strange, but let's get into detail to understand the differences. Okay, so if you're looking for free online tax calculators, feel free to head over to our website, and we have both UK and US tax calculators that you can use for free today. And there is a QR code for you to nip over to our website now. The link is also in the description box below. Okay, let's talk about LLC versus C corporation and what they really are. Now, what you need to think about when you're getting any form of business income, you could be taxed at a personal level, and that is when you own the business or the assets in your name only. You also have a limited liability corporation, which is an LLC. Again, we'll go into the details, but this is the second option. Or the third option for most people moving from one country to the United States is a C corporation. And we need to really understand what the differences are between those. If you're looking for US tax advice or UK tax advice, make sure that you look at this QR code and get that international tax call with me. The link will also be in the description box below. All right, so what we need to think about here is tax and legal. And it does say straight away over the right hand side here, LLCs may be taxed at your personal or corporate tax level. So it is possible for an LLC to be taxed at your level as a personal income tax level, or a corporation tax level. And now you do need to get some guidance and tax advice on that. It can be quite complex, so make sure you get some good advice before you do anything at all. So the first thing is, if you're self-employed, what does that mean? Well, if you're self-employed, you're not acting through any corporate structure at all, not an LLC, not a C corporation, just everything in your name. And that means from a tax liability, you're going to have income tax at your personal level. So the income tax bands according to the US IRS system. From a legal perspective, you are personally liable for anything goes wrong. Now, if you move to the United States, what you do need to think about is it is a litigious country. So that means that you are going to have more suits against you than most other countries, I would say. So really being self-employed is quite dangerous if you're moving from a country like the UK, where yes, there are legal suits, but not as much as the United States. So make sure that you understand that before you do anything. Then there are two other structures. There's the LLC versus the C corporation. Now, bearing in mind that the tax level, as I said earlier, that the LLC may be taxed at your personal level or a corporate level, so corporation tax as opposed to income tax for an LLC. But do note, for both the LLC and C corporation, you have limited liability, as in anything goes wrong, you are sued. Well, not you, your company is sued, and therefore the liability sticks with those corporate structures, not you personally. The C corporation is both a corporate level from tax perspective and a corporate level from the liability against any legal suits as well. So hopefully that gives you an overview between the tax and the legal matters for all three structures. Now, whenever you're looking at an LLC versus a C corporation, you have to think about the company, as in the company tax that you pay, but it will be based at the federal tax, which is a country tax. Now, again, if you're moving from countries such as the United Kingdom, where you just have one tax system, in the United States, you have a country level, but you also have state taxes. So wherever you're moving to, you will have a corporate tax level. In fact, you have an income tax level as well in the states that you are in. And then you have another form of taxes, which could be possible if you're self-employed, especially, whereby you're paying 15.3% of Social Security, which is a mixed bag of Social Security, Medicare, and this extra Medicare tax as well. And we'll go into that a little later on. If you are moving from one country to another and you're converting lots of money, make sure that you get the very best currency exchange rates using that QR code, and the link will also be in the box below. LLC, so self-employment is if LLCs are taxed at personal level. I mentioned earlier that an LLC could be taxed in your personal level, income taxes, or at a corporate level, corporation tax. And here we're going to focus on it if you will tax on self-employment. This also applies if you are self-employed. Okay, so self-employed or LLC being taxed at your income tax level, personal. You have other taxes to think about whenever you'll have an LLC at a personal level. The 12.4% social security happens when you have profits of £400 to £106,200. You'll also have Medicare, which runs from £1 or £1, think about UK there, from $1 with no maximum, and there is a 2.9% tax there. You have an extra Medicare tax at 0.9% whenever you have profits of $200,000. That $200,000, by the way, is for a single person. There is different rates for married, filing jointly, but I'm just going to focus on individuals for now. You need to be aware of state tax laws as well. So this is all at the federal country level, but then you have other taxes that you need to be aware of where you are working in the state. Okay, so what we need to think about is the tax levels that you have. If you have an LLC, you could have it at the income tax level, as we mentioned before, or you could have it as a corporate tax level as well. Now, what we're going to look at is the profits of 50,000 where you're going to be taxed the most. And straight away, you can see 37.3% if you're going to be taxed at the income tax level for self-employed or LLC, if you're choosing that option. And that's a mixed bag of the 22% income tax rates from the US, plus 12.4% for Social Security and 2.9% for Medicare, versus a corporation tax rate of 21%. And you'll notice that 21% is a flat rate irrespective of how much you earn. But what you do need to think about using a company structure like this is that you have the corporation tax of 21%, plus you'll have this income tax as well on the dividends that you extract. So you could say that you have double taxation matters, and that would be true because you have the tax in the company there and taxed when you pull it out again. One thing you do need to remember is that you will not suffer any Social Security or Medicare taxes on those dividend withdrawals. All right, so now we move over to 106,200. Again, if you have income on your personal level, self-employed, or an LLC taxed as your personal level as well. And that tax rate is 26.9%, which I've put 106,200, strange number. Why is that? And that's because the 12.4% disappears. So you're left with income tax level at 24% plus 2.9% for Medicare, and that stays. So 26.9%. Income tax level goes up again. So if you have profits over $250,000, then you can see there that income tax level really jumps up to 35%. So that's quite significant now. You might want to start using a corporate tax structure and then take out dividends up to a sensible level and then keep the money in the company to reinvest. And that's because 35% income tax plus 2.9% Medicare, but you have then this additional stealth Medicare tax of 0.9%. So that brings the total now to 38.8%, but it goes up again if you have profits of 600,000, then the tax rate goes up to 37% for your income tax plus 2.9% plus 0.9%, which is 40.8%, which is substantial. Not only that, but you also need to think about if you are going to be taxed at an income tax level, then you have income tax rates to apply as well. And if you look at some of the states, like New York is 10.9%, which is a high income tax level, versus Florida with 0% and Texas. So again, you might want to think about where you base your business. If you have a corporate tax structure or an LLC taxed at a corporate tax, then again, you need to still think about state taxes for corporates as well. Texas, you'll notice, is 0%, which is really interesting. Florida, where I like, is 5.5%. But again, if you need to look at a place like New York, you are going to pay 7.25% corporation tax, which is substantial. to be fair. So again, you do need to think about where you base your business. Take money from a C corporation. There are options if you do go for a C corporation. First of all, you could take wages, which you're thinking now, here you've got income tax plus Social Security plus this Medicare, as we've covered already. The big thing for me though is that these costs will be tax deductible for the company, so it does decrease your corporation tax. Plus you will need to think about any anti-tax avoidance schemes that the IRS will throw at you by using C corporation, especially if you're a service business and you kind of take the minimum amount of wages out. So you really do need to get some tax planning around this to make sure that you hit that sweet spot, keep legal whilst being tax efficient. And of course, then you have this dividends and income tax levels. Again, just mentioning the anti-avoidance there for you.